For all there is to know about property tax exemptions, here is Chief Assessor Randall Austin.
Hello, my name is Randall Austin. I'm the Chief Assessor for the City of Greenfield, and we're here today to talk about exemptions that are available to help with real estate taxes in the City of Greenfield. We have a few different types that are available. Ones for seniors, veterans, and blind are the ones that I'm going to be here to talk about today. And so let's get right into it. When you're applying for an exemption, there's certain documentation that we're going to need. The assessors need to verify the income that you have to see whether or not you qualify, and that comes in a few different ways. We're looking for Social Security information, Medicare, any public assistance that you're getting, any pensions or retirement income, wages of any kind. So a 1099, if you have a property, a rental property, or if you own a two-family home, we'll need to see if you have the other side rented out and the income that you're getting from that. Any dividends and interest that you're getting from bank accounts and that type of thing is what we're looking to verify. There's also an asset requirement. So we're looking to see what type of assets you have. If you have a rental or timeshare, stocks and bonds, CDs, checking accounts, money market accounts, any type of credit union, IRA, 401k, any type of asset that you have, that's information that we need some type of record of and needs to be disclosed on the applications. So as far as the asset eligibility, we're looking at your assets as of July 1st of 2023, which is basically the start of our fiscal year. For a single person, your total assets cannot exceed $39,296. If you're a married couple, it's a higher amount of $52,395. And it doesn't include the value of your home. So senior exemptions, who is eligible and what are the requirements? Well, initially, when the town adopted it originally, the age requirement was 70, but we have adopted 67 to make it a little bit quicker for people to be able to qualify. You need to own and occupy your home for the last 5 years and have been a Mass resident for the last 10 years. And again, you have to meet those income and asset eligibility requirements. So one of the benefit that is of the greatest value for seniors, if you can qualify, is the Clause 41C, which is a $1,000 exemption amount from your total tax amount for the year. So again, for this year, if you're a single person, your income cannot exceed $26,197. But part of that income is going to be a pension or Social Security, and there's an exclusion amount that's built in that actually brings our amount to a higher amount of $31,851. So you can't make more than $31,851 and qualify as a single person. So for a married couple, the limits are a little bit higher, and the income can't exceed the $39,296. With a Social Security exclusion and Social Security / pension exclusion of $84.80, bringing the total that you can't exceed for a married couple to $47,776. So that provides that $1,000 benefit, and those are the requirements and the information that we're going to need to verify it. But there is another senior exemption that is available, and it's this 17D. It is for seniors, it is for surviving spouses, or for a surviving minor child whose parents have passed away. Again, some requirements are you need to be living in the domicile for at least 5 years, and either the surviving spouse must remain unmarried. If you get remarried, you would no longer qualify, but this is at any age. You can be 20 years old and have unfortunately lost your spouse, and you would qualify for this $175 exemption amount. There is no income requirement, but the asset requirement is still there, so your assets can't exceed $52,395. That covers it, the exemptions that we have for the seniors. We also have exemptions that are available for legally blind people. It's like 37A, and the exemption amount is $500. The requirements are that we will need a current certificate of blindness from the Massachusetts Commission for the Blind. And that's something, it has to be current. We can't take one from 1 year. As you apply every year, we'll need another certificate that shows it's current. And again, you must own the property as of July 1st. For all of the exemptions, the qualification date is July 1st. With this particular exemption, there are no income or asset stipulations. That brings us to our veterans exemptions. So there's several exemptions that are available for veterans, but they're all based off of a disability that you have that is connected to your service, your time in the service. If you have a service-connected disability of 10% or more, you will qualify for this Clause 22A exemption. It's a $400 exemption. Or actually, I'm not sure on the letter on that, and we'll get into that a little later. But who's eligible for this? So you have to have that service-connected disability. It's something that you're notified through the VA, and there's a benefits letter that you would get every year that we would need to qualify you. Who is available besides the disability? Any veteran that was awarded a Purple Heart or a Gold Star mother or father. And if you are the surviving spouse of military personnel, you and remain unmarried after the spouse has passed away, you're eligible for whatever exemption they were qualified for while they were there, while they were with us. There are other veterans exemptions, and depending on the percentage of your disability or the complication, I guess, of the disability, there are other ones that are available. This Clause 22A. And so this is for veterans who have suffered in the line of duty the loss or permanent loss of one foot or hand or eye. As the hardship that is being borne increases, so do the benefit amounts. So the 22B is a greater amount of $1,250 for veterans who have suffered the loss or permanent loss of both feet, hands, or eyes. So that's a greater exemption. Then if it's to the point where there is special housing, especially adapted housing that's needed, and let's say a paraplegic situation, there's a greater benefit of $1,500 that's available. There are additional veteran exemptions too, so including this 22D, which is a full exemption from all real estate taxes. Now, this is something for the surviving spouse of someone that has, been in the service, married to the spouse, and they passed away as a result of their disability that they received from their wartime service in the past. It was Agent Orange and just like an Agent Orange situation, but recently they've expanded it, and it's a little bit more far-reaching. There is the Clause 22E, which is a $1,000 exemption, and that is for anyone that has 100% disability. In some cases, you might have less than 100% disability, but you're being paid at the 100% rate due to unemployability or some other factor, and that you would still qualify for the 22E, which is the $1,000 exemption. And then there's another 22F, which is another full exemption, and that's for someone that has passed away in the line of duty. So as far as the timeline and procedure, if you are a first-time applicant and it's something that you've never done in the past, visit the assessor's office and talk to us about getting an application. We'd be happy to provide you one and some additional information and any questions, answer any questions that you have at that time. But once you are in our system and you've received that exemption, then we start doing a follow-up every year. We wait until the qualification date of July 1st, and then we'll send out the applications to anyone that's received them in the previous year. And in some cases, we'll send along an informational letter, especially for seniors. We figure that at some point someone's going to be helping them out, and they're going to need some information about what the process is. And it tells about some of the different documentation that we need and gives our number in case there's any questions. So the following year, you're going to receive it, and once you're in the system, then even our billing system is going to anticipate that you will receive this benefit the following year, and it's going to adjust your tax bill so that it's more of a true quarterly amount. The sooner you return it to us, the better. The deadline is December 15th. We'd like to have them a little bit in advance of that, and the goal is to get it into our system so that the billing system will take that into account, and it won't be something where we'll have to send you a check back. It's just going to kind of calculate it in. So the deadline we're saying is December 15th, but the actual deadline for returning the information to the assessor's office to qualify for any given fiscal year, for instance for fiscal 24, is April 1st of 2025. So you have 3/4 of the fiscal year to apply and get this information back to us. The important thing is to get us at least the application by that time, and if there's additional paperwork, then we have some time to work with. But it's basically no later than 3 months after the first actual tax bill is mailed, which is the January tax bill. So 90 days after that is April 1st, and that's how we get to that date. So I appreciate your patience while I was talking, and does anyone have any questions?
Yes. Why is it better to have the application in December versus the April deadline?
As I said, or actually, it's because we want to be able to calculate that into the bill. So before I create the bills for the January billing, I want to know that you have gotten the exemption. We've received the application. It's been voted by the Board of Assessors and granted. And then I can have that worked into your tax bill so that we're not asking for as much money. And that's, kind of a tax bill question. I have some other information that I'm going to disclose, and it's about the tax bill. Do you have any other questions that have to do with the tax bill?
Yes. When do tax bills come out and when are they due?
So the tax bills come out on a quarterly basis. We're a quarterly billing community with a fiscal year that starts January 1st or July 1st and ends June 30th. And so the tax bills go out on a quarterly basis, July, October, January, and April. And you have 30 days to pay before it would be overdue.
And why does the value of my property not appear on the bill?
So we, as I said, are a quarterly billing community, and we send out the first 2 bills that you get, and they're referred to as a preliminary bill. It's a preliminary bill because we don't at this time know the tax rate, and our values haven't been approved. If we're making any adjustments to our values, they need to be approved by the Department of Revenue, and that hasn't happened yet. That happens usually, historically, for the town of Greenfield in November. So we have a classification hearing, and the tax rate is set by the City Council, and our values have been approved prior to that, and that's why the first 2 bills that you get are preliminary, and the second 2 we call actual bills. And we call them actual because now we know for sure what the tax rate is. We know for sure what we're saying your value is and what your portion of taxes is going to be according to those 2 factors.
And if I think my tax bill is too high, is there something I can do?
There's a certain time of year, yes, when you can appeal or apply for an abatement to your real estate taxes. And that is in January 1st to February 1st. You have 30 days to apply.
For more information on property tax exemptions and other assessor-related content, visit the greenfieldma.gov website and use the assessor's webpage.